So that's it in terms of high-level discussion, but of course, today we want to sort of dissect the budget and come up with interesting insights and also resolutions that will then forward to the Minister of Finance. I think when we are organizing this event with Zim in, we had a discussion, of course, with the Minister. He is not in, he has traveled to Dubai, but the sort of the approach is to then engage with industry and then come up with these resolutions. So we then expect another engagement with the minister soon after this event. So moving forward into the industry conversation, I would like to call upon Lawrence Nyazema, who is the president of the Bankers Association of Zimbabwe, to come through to the stage. Dumisani Ngwenya is also a tax expert who's under the Institute of Chartered Accountants of Zimbabwe. And of course, Misheck Ugaro, who is with Employers Confederation of Zimbabwe. So thanks very much, gentlemen, for being part of our program. I think I'll just sort of give you 5 minutes each to just make your contributions. What are your thoughts around the budget, and also speak around your industry that you're representing in terms of implications and some of the issues that you can actually pick up out of the budget. So I'll start with you, Mr. Dumisani Ngwenya. Of course, there are a lot of tax issues that have come up. So can you just make a 5-minute submission of key highlights and your thoughts around what the minister has done on the tax side of things?
Thank you very much, Batanai. Ladies and gentlemen, allow me to observe protocol. As observed anyway. Thank you very much. The name is Dumisani Ngwenya. Representing the tax advisors from a fraternity. I'm coming from the Institute of Chartered Accountants Tax Committee. Basically, looking at the budget, quite a lot has been proposed. I'm sure you will look at. The most important thing is to see whether, in terms of paying tax, there are always competing views between the government and the taxpayer themselves. Government wanting to collect more revenue and the taxpayer wanting to get as much as possible in terms of disposable income. So what comes to mind is the first thing is the minister announced some changes. Some proposed upwards review on tax-free threshold, 750,000, and thereafter tax. Then the highest tax rate, 40% at 270 million per annum. If you look at it, it appears like it's quite a lot of money, but come January, we all know what will happen. Maybe that amount will be quite less than expected. So this is what is on offer for employees. When it comes to corporates, the rate unfortunately has been increased. It was 24%, now gone to 25%. An interesting development which the minister announced, I'm sure he talked much about it, the domestic minimum top-up tax. This is a development that is happening with the world over, where revenue authorities or tax jurisdictions want to get much of the tax share of tax revenue from activities that earn that income in their own tax jurisdictions. For instance, in Zimbabwe, if you're operating in Zimbabwe and you're a member of a multinational company, the idea is for Zimbabwe to get as much of the tax revenue of that part of the income that is sourced in Zimbabwe. So what this minister is talking about is to say for multinationals, they determine their effective tax rate. There is a cap of 15%. So if for example, if your effective tax rate is 9%, the baseline is your tax should be 15%. So what it means is the difference between 9 and 15 will be the top-up tax. For instance, in Zimbabwe, quite a lot of companies would have some tax incentives. For instance, some would if you're operating in a special economic zone, your tax rate in the first 5 years is 0%. I'm sure there are quite a number of activities. So the idea is now with this minimum top-up tax is if you that part of the income which forms the income of the multinational company is sourced in Zimbabwe, Zimbabwe would then have a right to tax the difference on the top up. If you are being charged 10%, 9%, it means the difference will be, 0%, the difference will be 15 and 9 and 0. Then that tax on the part of the income that was sourced in Zimbabwe will then be taxed in Zimbabwe. I think this is a new phenomena, and it's happening the world over. Withholding tax on tender, I saw a comment that was talking about review upwards from $1,000 to $5,000, on which after above which that withholding tax will apply the 30%, but it's going to be affecting farmers that are delivering grain to the GMB. So anyone delivering grain to the GMB, you may not need a tax clearance if your sales are less than 5,000 and below, and that is an aggregate for the year, not per delivery. So it doesn't necessarily mean that you may escape the tax if your income or your revenue is more than 5,000. Deferment of VAT. What is more important is the increase from 180 days to 3 years, where you are allowed to pay VAT by way of installments up to that period when you import capital goods. But there is a catch. If you had that deferment and you might have defaulted in paying the VAT, that the full amount that would have been deferred, you now be required to pay it in full. Then there are penalties for that, 100% penalty, and also there's interest that is payable. Other VAT measures, 25,000 threshold. It now aims to bring in the small scale the SMEs into the loop as well, so that, but the most important thing is the administration part. Remember, when you are registered for VAT, you also need to comply with the requirements for you to have a fiscal device, which doesn't come cheap. Even the administration, you need to improve on your accounting. So that's what is on the offering for the small to medium enterprises. Then, of course, purchases to wholesalers and manufacturers, you must be registered operator, you must have a tax clearance. So that's another area that needs to be looked at. Then maybe CGT, capital gains tax, on mining rights, disposal. This was not part of the definition of a specified asset. Previously, it was looking at shares and immovable property. So if you cede your right or you sell your right to a mining claim, then there is CGT of 20%. Then lastly, I'm not so sure whether it's famous or not so famous, the wealth tax, 1% on any property that is valued $100,000 and above. We are now going to be paying wealth tax of 1%. Thank you. In a nutshell, that's what I can say for now. Thank you.
Thank you very much for that interesting overview around taxes. I'll move straight to you, Lawrence. Just give you a 5-minute presentation in terms of where you sit as Bankers Association in Zimbabwe.
Thanks, Master of Ceremony. Good morning, ladies and gents. I'll spend a minute each on the 5 items that I'll talk about. But Chairman, I think you are going to have a problem in terms of recommendations, because my first one is controversial and it's against the grain. Targets. As a motorist and driver, I am concerned that I'll be paying more. As a banker, I'm very happy with the new levels of toll gates. Where am I coming from? About 15 years ago, I was part of a team that was looking at the financing arrangement for the Plumtree to Mutare Road. The long and short of it was not bankable. Why was it not bankable? I think toll rates then for private cars were $1. For commercial vehicles, it was $2. And we normally look at commercial vehicles when we look at the bankability of these roads. The vehicle traffic just on that route was much less than what it is today. So if I fast forward to today, where it was $1, it's now going to be $5. And the vehicle traffic is probably doubled. Therefore, the bankability of most of our premium roads has greatly been enhanced. It gives us an opportunity as a country to unlock value where we have already spent money. And the best example that we currently have is the Bed Bridge to Harare Road. So it's one of those that government can decide to monetize, lease it out for 25 years, and whoever is going to be operating those tolls will take that risk on the basis that it is now bankable. So that's the first one. The second one is the increase in the levy for unbeneficiated lithium and uncut diamonds. It opens up space for our capital markets. And government is practicing what it is saying. Where am I coming from? As we speak today, there's a $200 million bond by Sandawana Mines, which is majority owned by government. So government is not just saying to the private sector, can you beneficiate? They are also saying to their own entities, can you go into the capital markets, raise money, and beneficiate? So for all the players in the capital markets, this is an opportunity for us to raise funding and beneficiate our raw products as much as we can. Then the next one, Chairman, I did not sleep because of this one. It was call after call. Is my safe deposit safe? And the dilemma for me and our industry is when customers and clients come and deposit whatever it is that they deposit in their safe deposit boxes, we don't know the contents of those boxes. And that is in line with international norms. So my take on it is the taxman would want to know, especially if there is significant monetary value in those boxes. And my understanding is they would want to check whether you paid tax in getting the proceeds that you are now keeping safe. That's my understanding. But obviously, social media has gone haywire, and there are so many interpretations. The way I look at it as a banker is to say I've been providing a service at a certain cost. If now there are some compliance regulations that I have to adhere to, I would look at the cost of complying versus the revenue that I've been getting. Similarly, for those that have been using these boxes, I'm sure you will also look at the cost of complying versus using alternative means. There was a mistaken view by some analysts that will take foreign currency away from the formal market. It will not, because it was never on our balance sheets. But all we were doing was using our votes to create safe space for those who want to keep their marriage certificates safe, their gold necklaces, and whatever it is that you have been depositing. Then the fourth one for me, it's a request to the Ministry of Finance, to Zimsters, and other interested parties. What is the exact size of our economy? I am confused and concerned because depending on who you talk to, it's as low as $20 billion and as high as $67 billion. So what exactly is that size? A few weeks ago, the Minister of Finance shared with us a number that was 32 billion. If I go into yesterday's numbers and I use the official rate on the Zim dollar that was provided, it becomes 21 billion. So I'm kind of confused, and that's the reason why, as industry and commerce, we had requested for the budget to be done in US dollar terms and then be converted at the point of payment if the payment was going to be in Zim dollars. Our simple thinking was it was going to be much easier for the average business person to understand the numbers. After all, the majority of businesses have gone to US dollar budgeting. So there is confusion in terms of the size of our economy, and we do base a lot of decisions on that particular one. Thank you very much, Chairman.
Thank you very much for those interesting insights. So move straight, Misheck, just give a brief overview just from the employer's side of things.
Thank you, Chairman, and allow me to say all protocol observed. From the employer's side, I think we share a lot of in common with the previous two speakers. And one of the speakers is actually a member of MCOS, the Bankers Association, a constituent of the MCOS. So we share a lot in common there. What I would just add is, as employers, we are also concerned by the impact of the budget on our employees. I know there is no labor here, and I will not necessarily speak for them, but we did not see a lot that pertains to labor or consumer benefits. In fact, we thought this budget would clarify a bit more regarding taxes. The only thing we saw was the movement on the thresholds of income, which is really minimal. It's really nominal. It's basically no change if you compare in real terms to where we are coming from. So we think that that was not addressed. Secondly, as employers or as business, we normally call ourselves business. One statement we really wanted to see following statutory instrument 218, where we now know we're in dual currency until at least 2030. We thought we would see something more concrete in terms of operationalizing the movement towards 2030. But the budget statement is the closest statement about one issue that concerns us was regarding taxes in Zim dollars was there will be periodic announcements as we go regarding collection of taxes in Zim dollars on specific items. That is the closest this statement mentions about the roadmap to 2030. So we think it's still gray. It needs to be clarified. Next, we think that whilst it makes sense to review the targets and make them bankable, as a colleague has said, but it affects the ease of doing business. It actually is, this is administered inflation. It's going to impact on our competitiveness because we move goods and we transport goods across the networks. So the huge hike on targets is going to be significant on our expenses, which is unfortunately going to counter all the efforts on fighting inflation. So perhaps that could be looked at. But I already see an arbitrage window there because I think those targets will be paid in RTGS. And it has another double whammy effect. So we think that maybe when this gets debated in Parliament, maybe a bit more input can be put in there. Finally, and in support of what Lawrence just said, we actually do not really know the size of this economy. It's very vague. So if we are making plans going into the future, we are not very clear which figures we should be using. The move to tax the SMEs, widen the tax base, is welcome because we've been crying about the impact of the informal sector. And I would talk specifically in the retail sector, where demand has actually been moving from the formal retail shops into the so-called tax shops. So this move, I think, is good. We applaud that. Thank you very much.
Thank you very much, for the presentation. So before I open up the floor for questions, gentlemen, I have a question for you, Lawrence. I think being in the banking sector, I think what we've seen over the past couple of years in terms of multinational banks, your Barclays, Stanchart actually moving out of Zimbabwe. And it also speaks then also to the tax environment. Of course, there's the top-up tax for multinationals. So are we not supposed to be actually putting out tax incentives to encourage more players or more foreign multinational companies to come in? Can you just comment on that in terms of the business environment itself and how we're positioned as a country in terms of attracting players in the banking sector?
So my view is we need to strengthen our local institutions. So if you go to the United States, the largest player in their economy from a banking side is JP Morgan. If you go to China, it's similar. If you go to Egypt, it's National Bank of Egypt. If you go to South Africa and right across Africa, it's Standard Bank. So what they did was to empower their banks in South Africa. So if I look at the top 10 banks in Africa, I think 4 come from South Africa, which means at some point they made a deliberate policy to strengthen their institutions. And what they were guarding against is what we have seen in this part of the world, where Barclays wakes up and says, we are gone. But I don't think CBZ will wake up and say, we are gone. Where will they be going to? Yes, they can go into the region, but the base better be in Zim. We have seen similar trends in Kenya, where the government of Kenya is deliberately strengthening the likes of KCB, the likes of Equity Bank. And I'm not talking just about the banking sector. Right across our economy, let's have our domestic companies being looked after. I actually think that we tend to roll out the red carpet more to the foreigners. So the foreigners are the ones who typically get your 5-year tax-free. And then after the 5 years or after 7 years, some of them will pack their bags and go. So let's create a balance, let's create incentives for everyone, but let's find ways of strengthening our local institutions alongside the foreign ones.
Interesting. It's quite clear that you are from CBZ. No, that's good. Maybe to you, Mr. Ngwenya. I think the wealth tax issue is a point of discussion to say that, of course, we've seen a lot of investment happening in the property or real estate sector. Are we not shooting ourselves in the foot in terms of affecting the reuse that could come out of some of these properties with this wealth tax?
Thank you very much, Mr. Chairman. I'm tempted to respond to the question on tax incentives before I look at if I may. Thank you very much. You raised an issue to do with tax incentives and the domestic minimum top-up tax. I think like he rightfully said, yes, the incentives are good, but at the end of the day, maybe those people that enjoy the incentives may not even pay tax at all, because like he said, after some few years, if things are not going well, you can easily pack your bags and leave. So the idea is for us to at least get some benefit out of the resources that are being exploited in Zimbabwe. If you look at the issues around the beneficiation of lithium and all, the idea is for us at least to get a benefit out of our resources. And what is happening the world over, looking at revenue authorities the world over are very much concerned about the erosion of the tax base, and these incentives have also are also a catalyst of eroding the tax base in such a way that tax profits are shifted to countries where there are low taxes. I think the introduction of this domestic minimum top-up tax it's a worldwide phenomenon. I'm sure it will also benefit Zimbabwe in a way for us to get at least some revenue out of our resources that are being exploited. Then looking at the wealth tax, yeah, that one is we are yet to see how it's going to be implemented. I'm sure if you can recall, sometime back, I think last year or this year, Zimbabwe Revenue Authority issued some public notice calling upon persons that constructed houses or purchased houses which are $100,000 and above to come to volunteer, to come to Zimra to explain where they got that wealth, whether that wealth whether tax was paid on the income that was then used to purchase or to construct those buildings. So I think this is more like an improvement from putting some legislation into perspective to at least bring in such activities into tax. But the challenge then would be how it is going to be implemented, who is going to value the property, and valuations take a lot of forms. And at the same time, are we saying everyone who is having that property for 100,000 and above should register with Zimra, and how many would then register? Is there capacity to do that? But I think more on the administration side. And also, if you look at some properties, some of them, the values may have increased because someone has built a house next to you, and around that area the value has increased. For instance, if I purchased that house in the 80s, maybe it was for less than $10,000, but the value has gone up to $1 million. I'm a pensioner. I'm supposed to be paying tax on 1% on that million. And then the question is, would I be able to afford to pay the tax? So those are the things that one looks at and see whether it can be implemented and people can pay the tax without much pain. Thank you.
Interesting. So it's really about the implementation of some of these policies and measures that we're seeing. So because of our time limitations, I'll just take a question from the floor. Anyone willing to come through with the question, please feel free. There's a mic. Right. Anyone with a question? A burning question? I can see Ronald there. If you have any, feel free. Got a question there.
Good morning. We've seen that the budget is really introduced quite a number of taxes. So I think from a nutshell, are these taxes not just going to increase our inflation, or are we safe in having these kind of taxes, especially the wealth tax? I think one of the speakers also said that looking at a point where some of the owners of the houses are pensioners, and maybe they're getting $30 from their pension, and they're supposed to pay $100 a month. Is that sustainable?
Thank you for that question. Maybe Mr. Ngwenya, you are the tax guy. Can you just respond to that?
I was trying to dodge that question to have the economists look at it. Yes, there are quite a number of tax issues that we talked about. I would want to be very careful in not commenting about inflation and all, but so to say, yes, there would be some increases in terms of what taxes will be paid, and so maybe the economists can assist in that regard. Thank you.
My comment was that I think I kind of alluded to I called it administered inflation. So it does obviously contribute to price increases. But if you look at the budget overall, it is inflationary, the whole budget anyway. Because if you see where we are coming from, last year's budget from, I think, if I'm not wrong, it's about 4.9 trillion. We're jumping to almost 10 times in terms of the budgeted expenditure. So that's inflationary in itself. And this is just an integral part of the whole thing. So yes, obviously, I would say my inflation expectations are high from this current budget. Thanks.
So thank you for those remarks. I think we're going to see a lot of pressures, especially around disposable incomes. So let me take this opportunity to thank you, gentlemen, for participating in the conversation. So we'll quickly then move on to the next segment. You can just, thank you. Thank you. So at this point in time, we're moving to the next session, which is basically the analysis of the budget. And I would like to call upon the Chief Executive Officer of AMH Group, Mr. Kenyas Mafukize. Can you come up and lead the session? Thank you.